7 reasons why fix and flip real estate investing will break you in 2025. My name's David, and over the course of the last year and a half, I've helped my brother in his fix and flip business raise his revenues up 14 million in gross revenue as of 2024. And there's a lot of trends and patterns that I've noticed both in the new construction that I was doing, then the fix and flip I was helping my brother with, and now new construction that I'm back involved with in the South Florida market. And so I wanted to talk about why I think new construction is so much easier, but primarily why fix and flip is a dying business model and is destined to become obsolete in 2025. The first reason would have to be the cost of capital. When doing a new construction project, you have access to conventional bank loans. The majority of my loans, depending on the time of year, were between 5 and 7%. Right now, you're between 7 and 8%. Whereas in the fix and flip that I'm doing with my brother, we're paying 12, 14, and in some cases 16% for our money, which is bananas that we have to pay that much money, that large of a percentage of our profit towards an investor when we're out there doing all of the work. That's not the case with new construction. Right before I started shooting this video, I got off the phone with one of the banks I work with, and new construction loans are right around 8%. So we're talking for hard money, for fix and flip, it's potentially twice the interest rate. And the thing is with these short-term fix and flip projects is a bank will not touch it. Conventional banks are just not willing to touch short-term fix and flip projects. So you're forced into a position where you're paying 12, 14, if not 16% on your money, which just destroys your ability to be profitable. The second reason why I think fix and flip is in trouble going into the end of 2025 is the margins are shrinking. It's gotten so competitive out there that everyone is spending their money fighting for the same scraps. And you know, what used to be a deal that had $150,000, $200,000 on it, by the time you pay the wholesalers, by the time you spend your marketing budget, you're lucky if you're walking away with $40,000. The inverse of that is on a typical new construction project at about a $500,000 to a $750,000 price point, you're looking at, on the low end, $120,000 in profit. And on the high end, depending on what the market is, you have the potential to be all the way at $250,000 in profit on one deal. The third reason is competition. If you're watching this video, you're probably in the industry. I don't think you would be listening to me if you weren't already a fix and flip investor. And we've all seen how over the course of the last 5 years, it has gotten increasingly more and more competitive. When I did my first fix and flip, I was 15 years old. That was a long time ago. Jeez, that was over 2 decades ago. And there was very few people doing it, right? We didn't really have YouTube. There was no influencers on the scene. So we didn't have all this competition that we see today. Well, now everyone is fighting for the same scraps. When we go to a seller, the seller's already heard from 5 of our competitors. And so what happens is when you're all competing for the same inventory, it's a race to the bottom because we're all trying to figure out how we can offer the lowest price to that seller to get our hands on that inventory. And so the competitive landscape is just completely out of control to where it's destroying the margins. The fourth reason why I would say fix and flip is in trouble going into 2026 is the unexpected repairs. When you're doing old inventory, you're buying a house, you never know what you're going to find. And about 2 months ago, we purchased a piece of property that should have been a home run. Great neighborhood. We've sold property in this neighborhood. We knew that the comps were good because we had just done a deal. Buy the property. Of course, we didn't do proper due diligence, and there ended up being a foundation issue that actually cost us money to get this house off the books. That's the problem with the old inventory is, you know, if you got a tenant in place, you're trying to work around a tenant. If the seller still lives there, you got to try to see what you can see. And if you have a contractor, you drag your contractor in there. You're trying to let him get a look at stuff and try to assess the situation. And it only takes one mistake. Like, you can be making money on 3 deals, and then on the third deal, if you miss something and you don't catch it before you close, and it costs you money to get rid of that property, well, then you just affected your money from the previous 3 deals. The fifth reason I would say fix and flip is dying going into 2026 is the labor shortages. I'm trying to get a duplex rehabbed right now. And with the new construction trades, you have your drywaller, you have your electrician, the plumber, anyone. You can call these guys and they'll come and do the electric. They'll come and do the drywall. They'll come and do the HVAC. But none of them are going to handle a project from start to finish. So finding contractors that can come in and that can efficiently manage the job, manage their guys, make sure that things are getting done in a timely manner. It's an old breed of contractor that seems to be dying off. Most guys today are specialized trades and they don't have the ability to manage a whole house from start to finish. These issues that you have with the trades not handling a house from start to finish are actually to your advantage in new construction, because you can call a plumber to do your rough in plumbing. You can call the electrician. All of the problems that creates in the reno world of not having a guy to handle the entire house, that's opportunities inside of new construction, because in new construction, you may hire a general contractor or you may be the general contractor, but now you're calling electrical companies to bid your electrical. You're calling plumbers to bid your plumbing. And you can actually segment that stuff out in new construction, something that you don't necessarily have the luxury to do in fix and flipping. The sixth reason why I would say that fix and flip is dying going into 2026 is timelines. You have slow inspections, you got longer timelines because of labor shortages. And because of these labor shortages, what it's doing is it's making our timeline longer. And so that $40,000-$50,000 we were going to collect off of this flip, even if it's 80,000, that just gets smaller because we're paying these high interest rates on our money. And so every month that goes by, it's another couple $1,000s off of the overall profitability to the project. And so then you add in slow inspections, dealing with the city, because the inspectors have so much old inventory they have to go out there and look at, and that time frame just keeps getting wider, regardless of whether you're managing it well, because the inspector is not under your immediate control. Now you've tacked on an extra 4 or 5 months of time, which means interest, which means less profitability. And the seventh reason I would say it's dying going into 2026 is poor ROI. And when I say that, I don't mean just return on investment as far as dollars. It is a poor return of time. Because if I can do one deal and make $200,000, or I can do 4 deals and make the same money, I'm going to choose the one deal all day long. A project might take 6 months to a year. Even if you rehab it in four months, it might sit on the market for, say, another 2 to 3 months. And then by the time you closed, it took you 3/4 of a year to make that $60,000 on a fix and flip. Where if I have 12 months, I can build a house, I can complete the house, I can get the house on the market, and then sell it inside of that 1-year time frame. My interest rate is in half, and I can collect 4 times the profit. It's a no-brainer. And what I'm doing for myself and also with my brother is we're transitioning all of our fix and flip resources into new construction. This is something we've been doing since the beginning of the year, and it's a sizable operation. We did 14 million last year, which is a little over 120 transactions to do that. But we can take that same resource allocation and put it towards building new construction and potentially collect 4 times the profit and do a fraction, maybe a quarter of the total deal inventory. I am educating guys on how I can help them make the jump, because people in the fix and flip are very hesitant to switch over to new construction, and it's actually easier in the long run. And so if you would be interested in getting a hold of me, book a call, we can have a conversation. Maybe we work together, maybe we don't, but I can answer a lot of questions because of the sheer number of new construction projects I've done between single family apartments and townhouses. I can help you work through a lot of the problems that you might be facing, or just a lot of the intimidation you might feel going into a new construction project. I promise you it's much easier, and you'll actually wonder why you didn't make the transition sooner.